Welcome back to another episode of the Hoboken Real Estate Advisors podcast. I am Jeff Bonk. We have Christian Gonzalez. We have Danielle Red Bonk and Mark Staley. We are your Hoboken Real Estate Advisors. It is July 23rd, and we're going to be talking about some headlines, some things going on in Hoboken. We're going to have some fun today, ranking some different Hoboken restaurants, parks, coffee shops, all those things blindly, and seeing who can nail these lists and who ranks them completely out of order. But here we are, guys. What's going on? How's everyone doing?
Good.
Doing
It's
good.
a beautiful weather for the next week. I think we have highs of 80s and lows of like 68, which is mint.
No, it's
Let's
beautiful.
go.
And no heat waves, no storms. We got a nice little 5, 7 days coming in front of us to enjoy.
Dare I
This is
say,
good.
dare I say it was a little chilly this morning without getting slaughtered?
Stop it.
Yeah, ridiculous. No, you cannot say that.
Just
We
This is
talk.
like,
Well,
actually
I'll
perfect
combat
Hoboken
that.
summer.
I'll
Well,
combat that, Red, and just say like we live in the best part of the world. I mean, I'm
it's a good
super
climate.
biased, but we just have such a good climate. I talk about this a lot with my clients. New York City is the greatest city in the world, and one of the reasons is because the climate is amazing. Our summers are so enjoyable. They're not stupid hot, except for periods here and there. And then our winters aren't that bad either. I mean, we get really cold, but only for like a week or two. So, I mean,
And if
it's
you're a
it's an
true.
awesome time of
skier,
year.
you just hop in the car, and within an hour and change, boom, you just hop on the mountain.
That's
Woo!
another thing. We're 2 hours from mountains and an hour from the Atlantic Ocean and an amazing beach. So yeah, we are blessed in this part of the world. It's pretty
Anytime
awesome.
So
between
good.
December and March, if you're looking for Mark on a Wednesday, he's at Hunter Mountain.
We're plotting. Yeah, Christian and I met this morning. We're plotting out the winter already, which is a little premature, I must admit. But
It's kind of
it's
sad.
yeah,
It's kind of sad. It's mid-July and we're talking about skiing.
It's all
You
good.
guys are very well prepared for booking kids for camps then, because you have to book kids for summer camps in like November now. So you guys are right on schedule for stuff like that
Wait,
we're living through.
no. In case in point, we missed the deadline to get season passes at the ski mountain. That was over
yes,
in April.
Yeah, now
yes,
we're
they
paying
do like
premiums.
they like to get that money early so they can plan accordingly, and it's yeah.
Yeah,
Yeah,
they
I'm sure
will.
you can still get them, right? It's just a little bit more money.
Yeah, we missed like the early
Oh,
bird
right. Yeah,
pricing.
sorry. Yeah, that's what I
Yeah.
meant.
Yeah.
But
Anyway,
totally missed the camps. Oh well.
big
Oh well.
headlines the last couple days and really culminating today as well. We are currently at all or 2026 highs for mortgage rates in the US. Crude oil's over $100 a barrel again. Stock markets are selling off, 10 years screaming. It doesn't look like we have any clarity on what is going to happen, how it's going to happen. There's more people involved now with the Saudis and everybody else. Uh, so where are we at, guys, interest rate wise? I mean, I think we're looking at high sixes now. We're like 6.5 to 6.75. Could push up in the high sixes. We're the highest we're seeing this year so far. We've seen these over the last couple of years, peak around these numbers, but we're getting back to like peak that we've ever seen. And what have we seen in the past when we've seen these interest rates hit? Have we seen buyers slow down? Have we seen listings sit a little bit? Like, what have you guys expecting to see if this lasts through another, couple months through the summer into the fall?
Yeah, just to give some context here in terms of how we got here and why rates are higher. This is a topic I spoke about on an Instagram post that I had pinned at the top of my account, that a lot of the market has a misconception about Fed rate cuts and how that impacts mortgages. That isn't how it works. So this week is a perfect example that with the war kind of kicking back up, oil prices kind of jumping back up, capital markets are pricing in a higher for longer from the rate cycle. So what that means is bond sell yields jump. This impacts mortgage rates. I know that's kind of like economic geek speak, but what we need to understand here is that mortgage rates are a byproduct of more of a macro rather than just saying the Fed is increasing or decreasing rates. It's a holistic approach. So where we are now, as you were saying, Jeff, is we've kind of popped to the high sixes, and that's painful right now, frankly, because people were already kind of struggling with that low six handle, and we were hoping to migrate towards the high fives, but we're probably going to be in this territory at least for the near term, and likely until this war is officially over.
Yeah, I agree. And I think like that's a good point that you made, that the interest rates and the mortgage rates specifically they're live markets. They're not static, like you mentioned. Like someone doesn't just drop them or lower them. It's supply and demand based on people wanting to invest in risk or risk off, right? And that's what we're seeing right now for sure.
Sure.
So that's a good point. Red, Mark, anything to share? What are you guys expecting with, rates now climbing back close to 7? What have you heard last times these have been there? And what should we be looking at in the Hoboken real estate market based on this?
I'll go because I am a little bit concerned. I'm listing a one bedroom at the T building, and traditionally that's a first time home buyer and a young person and a single income, or it's a cash buyer purchasing as pied a terre or for their child as an investment, estate tax saving strategy. So sometimes it's fine, but oftentimes it is that young person starting out wanting to buy their first property, and I am a little worried about that. Whereas on the big twos and threes and the higher price points, the all cash buyer isn't, we're not worried about those rates at all. So not to say I'm a little nervous about listing this one bedroom, but I just hope that it doesn't suck those first time buyers out of my buy pool, because it's such a great unit for that exact avatar of buyer.
Yeah,
What do
and
you
I would
think,
say
Mark
like
Staley?
I was
Let's
just
I
get
thinking.
a
mean,
fake mic.
go
Over to
ahead.
you,
Go.
Mark.
Well, let me hear you, Jeff, and then
Well, I was
I
going to
have
say
I
for that
something.
particular listing, I think the concern is like it's midsummer and these rates peaked, right? So how many people see high rates and go, I'll wait to the fall, right? Like
It's
that's so anything
summertime.
listing over the
We're
next
just gonna
few
go to the
weeks,
beach. Yeah.
I would
Well, that
definitely
yeah,
keep
that
that
brings
in mind.
up my favorite anecdote. What would you rather be doing? What, buying and selling homes, or swimming in the ocean and
Right.
soaking in the sun? And we get July and August. We don't get this is a special time of year. You should be outside. You should be enjoying family. So yeah,
And
that's the answer to that.
a beach
It's
pass is
slower.
$10, and
Yeah.
buying a home is more than $10. I'm gonna say.
Yep,
Yeah,
that's a
Uh,
thing. So that happens every year, no matter what.
I
Now we
know.
have the interest rate environment unfavorable for sure, and it introduces a ton of friction into an already difficult market where there's just not enough sellers. So, now there's not enough sellers, and the sellers are going to have a harder time selling because there's this friction on the buy side where certain buyers are just not going to be affording this market. That's a problem,
yeah,
and not to mention the fact that sellers don't sell when they don't have a good option to buy or move into, and that's what we've seen historically over the last few years in the high interest rate environment. If you're selling a smaller property and trying to buy a bigger one, and your monthly is going to more than double because of the interest rate environment, that's a tough trade to stomach. And you just
absolutely.
don't see sellers doing it as much. It's too much friction.
Yep.
That's the biggest thing that higher interest rates have done over the last 3 or 4 years. Whenever they spike, that I've noticed, it's frozen markets. It's people have just said like, I'm not going to sell. I can't find the next place to move. I'm not confident enough to list my place that I'll be able to find the next place because it locks up markets. And I think that's what we'll likely see how long rates stay here and how that plays out over the next few months. The other thing that I think is interesting about the Hoboken market specifically, and this is how like national headlines and economic news doesn't always affect everybody the same. Hoboken's it's interesting in two ways for this to me. It's a thin market. So if there's one or two buyers in a marketplace that really want a property, there's not a lot of trades like it. Mark, we just talked about this in a particular situation where there was one buyer, your buyer wanted something really bad and someone else just wanted it really, really bad. And like it was the only time that listing is going to come on in a year or two, something like that, right? So it's so thin that one or two people in a market can change it. So that like high interest rates may not affect you if one or two of those buyers are around, right? And both those buyers were cash. That's the other thing. There's so many overqualified buyers in this market, not for whole market, but like Red was saying, pied a terres. Someone could buy a smaller place with cash and be very price insensitive. These $2-3 million places, a lot of people have big earners and a lot of money they come from. So they're price insensitive. Like a lot of people that buy 1.5 million in Hoboken could afford 3 million. So when the rate goes up a
Yeah.
half a point, they're like, don't like it, but not priced out. But then other ones on smaller stuff, or like, depending if a couple of those buyers aren't in the market, the people that are could be rate sensitive right behind them, right? So it's a very interesting market to navigate when things like this change, because it is, very thin, but also there's a lot of price insensitivity out there. And if they're in the market when you list, it can really change the game for you. So it's about navigating that properly, and having that kind of comprehensive view on the market and on the process. So, all right, should we move on from interest rates?
Sure.
Let's
Yes.
talk about another headline. The headline, Mark, and this, I'm making up this headline. This is not a real headline, but the headline of World Cup price gouging, hotels profiting, and Airbnbs, all this stuff, right? And like destroying the local economy and overrunning stuff. That's what the headline said in a lot of places where the World Cup came and visited. Hoboken was obviously a massive host city to all the games in MetLife. What did you experience as
And the
someone deep in the,
players. Didn't the
and the
players
players were in
sleep
town a few
in our
times?
town?
Yep. What
Yeah.
did you experience? And what's the reality of how things shook out?
Yeah, I think I mean the lesson here is be careful of headlines and what the that spurs people to do and think. And one of the headlines that came out way before the World Cup started was that short-term rental managers and hotel operators were going to get exceptional profit out of this whole event, and that the people that were coming to visit were going to have to pay 3x, 4, 5x, 10x. I mean, I saw one headline that said Airbnb operator listing their home for $10,000 a night. And what ended up happening is a fantastic event. It was great for our economy. And it really, like, we're so grateful that they chose New Jersey and America, but it was a 20% increase in revenue in terms of hospitality, which makes that's fine, right? I mean, it's still so good, and I just don't understand why the headlines create this frenzy, and people actually flooded the market with inventory, thinking that they were going to have this windfall profit. So I actually feel bad for people that chose to leave town, rent out their property as an Airbnb to make this windfall profit, and then walked away with a few $1,000s and thinking, oof, man, that was totally not worth it.
Yep. That's the truth. It's the sensationalized nature of that.
Yeah,
Mark, or go
and
ahead, Christian.
I didn't mean to cut you off. And to kind of learn a theme from that, I think it was one of those headlines that kind of shocked the market. And Mark, to what you're alluding to, the flood in inventory was dramatic. So a lot of people tried taking advantage of this. It dampened the profitability for those that have been in the industry for quite some time. And was it still profitable? Yes, it was. Was it life changing? No, it wasn't. So I personally followed along because I had clients that specifically targeted acquisitions for this, let's say, past 12 months for short term rentals to get a leg up on the return on their investment. They did fine, but I don't think they did as they anticipated, or maybe everybody gets overly excited for a once in a every 30-year type of event. So we did well, but just not the major headline that was expected.
Definitely. And either Mark or Christian, I guess, for this, because for Christian, you have clients doing this too. If someone did want to invest in Airbnbs in Hoboken or Jersey City or Weehawken or any of the surrounding areas, like what should they be considering? Is there different layers of regulations and different things that they should be looking for? Just curious if you guys have any kind of like broad strokes advice, because a lot of people, I get conversations like that all the time. I want to buy for Airbnb, and it's like, well, do you understand that? So how do you first approach that conversation to make sure people know what they're getting into, what they need to do?
I have a very good answer, and I think this makes a lot of sense. It's taken me a long time to refine this. There's really two places you can buy a investment property that you would like to short-term rent. One is a vacation land, right? A beach town, a place where when it's not rented, you go and use it, and it's wonderful. And so it's a second home, but it really is a true investment because you're generating income periodically throughout the year. That's what really most Airbnbs are in the country, in my opinion, without looking at a real data set. But and then you have Hoboken in the urban centers. It's almost like an extra. bedroom for yourself. You like your, you want to be, as opposed to a really cash flow intent or positive investment. You're just not going to make that big of a return on a short-term rental in an urban center because it's so expensive to buy and maintain in the first place. So it's, yeah, that's my
Well, and
that's
Mark,
my
having
my
experience, most buildings have it completely outlawed. Most large associations, and you probably know the numbers, X amount of units and above, they don't allow it at all. It's 6 months minimum. But for you, you found a loophole in that. What is it? A multifamily that you can do it, or you have to owner occupy, or what are the exact like laws?
Yeah, it's not really a loophole. It's more condominium associations nationwide. They all use the same template when they file their master deed, and that template is drafted by an attorney, and it says no short-term rental. And you can go back to the 80s, way before Airbnb and VRBO, and it will still these master deeds still say no short-term rentals. It was people
Mm,
that are living in a condominium complex that are sharing hallways and backyards and garages. They've always felt that having people they don't know coming in and out of the property on a regular basis is not positive to their quality of life. So it's everywhere, and especially in Hoboken and Jersey City because we have so many condominiums.
right.
So that's self-regulated as long as the condo board is willing to enforce their bylaws, which is not
Right
always the
on.
case.
Because if you think about it, the quiet enjoyment portion is out the window. Because what do you do when you want to go on your bachelor party? You go somewhere, rent a place, and party. Like, what do people want to do for their sweet 16s or their graduation? They go somewhere and party, and that's typically not quiet. Christian, you deal with tons of investor clients. You're savvy. You are quick-witted with those investments. Have you found any investors that want Airbnb, and how have you dealt with them? I'm curious to know because as soon as I hear we want to buy a short-term rental, I'm like, talk to my buddy Christian.
Yeah, yeah.
I
Well,
can't help you.
I'm glad you passed me the mic because Mark, I wanted to kind of focus in on that point you were making when it comes to the profitability of the short-term rental, and this is why we preach here all the time, thinking big picture and macro, because what a lot of people miss when it comes to short-term rentals is the tax strategies behind it. So, for example, there's a theme that a lot of short-term renters, let's say Airbnb owners, take advantage of, which is called cost segregation, which is basically just a way of accelerating the cash flow cycle, where you're depreciating the home quicker than you would on a normal basis. And what does that mean? What that basically means is I'm writing a check for a down payment, and then on my taxes, I'm probably getting something similar to that amount back as a write-off. So when it comes to my taxes in my pocket, I'm keeping less. I'm keeping more from Uncle Sam and putting more in my pocket, which allows me to then scale to the next one and to the next one. So when it comes to those big Airbnb scalers, let's not focus on Hoboken in general. Let's just say high level. People do this on an annual basis where they are just kind of riding the wave of, I wrote $100,000 check. I got $100,000 off of my taxes. Okay, let's go do the next one and the next one and the next one. And they're basically just depreciating all these assets against their taxes, and that makes them have a very lean tax base.
Where was that first 100,000? You wrote $100,000 check for what? The down payment, you're saying?
Yeah, the down payment. So
Oh,
let's say you're buying a $500,000 one bed, one bath. You're writing a $100,000 check for the down payment. Then
I see.
of that 500,000, the value to the municipality is, let's say, 300,000. You're probably able to write off 80% of that year one, which is the advantage of the short-term loophole.
Gotcha.
It's all
Right.
geek speak. It's just Instagram and Reels just kind
The
of flowing into my stuff and learning all this.
the fun part, Red's learning about this from you right now. We did two of them last year, and
I don't know.
it,
He says these words, and
Yeah,
Red's
I'm
like,
like,
what?
yeah.
thanks.
As long as the credit card hits, we're good, right? We're paying the bills.
Exactly.
I didn't know he was a CPA too. That's hot.
Yeah, it's
But
it's
going
Uh,
back, Christian, is there, sorry, are there Hudson County STR investments like to be found? Like if someone asks me,
Sure.
shall I continue to refer them to you, or just say, no, man, that doesn't exist. Bye
No,
bye.
no, they are possible. They're unique. You have to kind
Okay.
of you have to scour, right? But
Right.
the easiest path is owner occupied. So if you owned a multifamily, for instance, and then you wanted to short-term rent some of the units, no one's going to hold that. No one can stop you from that,
Well, you
right?
got to have deep pockets for a multifamily in the Jersey City and Hoboken
Well, and the
sector,
city
or
could try to stop you from that eventually, right? So
That's
that's the
fair.
one thing
That's
you got
fair.
to watch.
why?
You got to watch municipality, right? Because
You have
some
to register it.
municipalities, yep.
You do have
Okay.
to register
They
it.
might introduce registration. That's what they did in Jersey City, is they banned large scale operators. So you can't buy a 10 family property and then Airbnb all 10 units,
I
but you
see.
can buy a two family and Airbnb one if you're living in the other. But you have to be living in the other. That's what Jersey City did
What
to
about
regulate.
3 and 4 family,
Hoboken
which
might.
are popular?
Yeah, I mean that's okay too, as long as you're living in one unit. It's
Live in one.
rare. It's a little more rare that you live in one and rent out two or three in the larger in a 3 and 4 family. But
Yeah.
that's still allowed in Jersey City. And Hoboken might end up regulating it. These municipalities, they hire a third party vendor to regulate. That vendor usually costs just as much as the money that they collect from all the operators. So
So it's not
it's really
worth
a
it.
wash from from the city's standpoint, but it is a way for them to monitor it and then be able to go to the residents and say, we're making sure that the town's not being taken over by short-term renters, which is that's something that residents will talk about, that threat.
Yeah, but not to mention, like, we're talking 2 families, 3 family. We're talking like 2, 5 and above. So is that even worth it?
No, it's
No,
not, in my
you're just going to
opinion.
make it your primary single family residence for your family's home. But now, as we branch out perhaps into like the Heights, Union City, West New York, there's probably some great opportunities to scoop up there. But is that a highly desirable STR location when folks are coming from Europe, other parts of the country? Are they looking to stay there? Probably not. They want to stay as close to the city or in the city, if possible. If I'm not mistaken, I don't know. I haven't ever really done a search for an Airbnb in my own hometown.
It's all about
Yeah,
proximity to Manhattan. So
Yeah.
Yeah,
if they have bus lines that go there and it's justifiable, then it comes down to price point. Because
yeah,
when it comes to these short-term rentals, all people are doing is crashing. They're just showering, sleeping, and they're out in the morning. They're
and they're
they're into
going
the
to
city all
explore.
day. They're
Yeah,
exploring the city and then they come back. So it's all about just logistics.
yeah,
that's
proximity
it.
is
It's a
key.
much smaller demographic of renters if you're moving out into those areas. The demand ends up coming from family members that want their own place. They don't want to crash on your couch, and maybe grandparents when you have a child and
Yeah,
you're living in urban settings, so we don't have big houses in this
yeah.
area. There's nowhere for my grandparents to sleep without and truly be comfortable. So Airbnb, short-term rentals offer a really great solution, and that's why I would hate for them to go away completely, because every single town in the country should have some of these just for those people.
Yep.
Yeah, because it's
Yeah.
nice to not have the. I mean, a hotel room is nice sometimes too, but it's nice to be able to like have your little kitchen or kitchenette or something like that in your own space.
Yeah. There's a lack of hotel rooms in the area too. I mean, Hoboken has one hotel. Or is it one? Yeah, one, right? I mean, Dharma Suites
Yeah,
is
Yeah.
not technically a hotel.
just the W.
It'll, yeah, it's like a long-term stay in Dharma, but yeah, for sure. And I think like there's specific use cases for Airbnb. Like I could see someone buying a $2 million multifamily in Hoboken, $3 million multifamily, house hacking it, living there for a couple of years, renting out a couple of them, and then moving out long term. They start doing long term. Like you have to have like a strategy around it that makes sense. But it's not. So many people I've talked to over the years, and I start going through the options of how it works and what's precluded and how hard it is to get a condo building that allows it, and they're just off and they're on long term rentals by the time you're through the conversation. It's not as advantageous as most times it seems. All right. Should we move on from Airbnbs and World Cups? Go England. Christian's part England now. He's rooting for England
Well,
4 years. English.
before we move on from the World Cup, the one thing I want to applaud, let's say the general area on, is I thought that things were handled so well here. And I learned that through experience because I was fortunate enough to go to one game in MetLife, and then I was fortunate enough to go to another game down in Miami. Mind you, the trip down to Miami was way cheaper than just going to a game at MetLife, but nonetheless,
It's crazy.
I applaud the local workforces because it was so efficient and so well done here. Whereas when I was in Miami, it was pretty wild. It was pretty frustrating as a consumer.
Yeah, I bet. That's awesome. That's really cool. All right, so let's move on. This is a big one, guys. According to Redfin data, Hoboken's up 20% year over year at the same time last year. 20% in value. Let's go, Hoboken.
Let's go Hoboken.
That's not true.
Yeah,
That's
it's
not
not.
true.
And I ran these numbers. I ran these numbers about a month ago, and we had 3 consecutive years of 6% appreciation.
That's
So
more true.
yeah, which is phenomenal, right?
No,
Yep.
great.
It's inflation plus 2%, which is likely tops in the country. Maybe other areas, specifically in Jersey, like the Monmouth counties, outpace that. But if you're getting a return of 2 to 3% above inflation, that's astronomical when it comes to real estate. So just a big applause to this, I guess, municipality for being the shining star that it is.
Yeah, for sure. And I think the thing I want to highlight there is that's real data off of Redfin's website, and a lot of people look at that type of data and make decisions and think both what their property's worth and tap out of markets because they're like, oh, I can't afford it anymore. Please, please, please don't just follow the headline and just read a headline like that. They're probably tracking a couple transactions that happened that were kind of outliers, that were big jumps in maybe not even similar type properties because who knows if one had a view, one didn't have a view. These numbers, these headlines are sensational. Just like we were talking about some other stuff earlier with interest rates and different things like that. The reality is number one, nuanced because I can point to some things that did just jump 10, 15%, some different products inside of Hoboken, some different, you know, categories of homes, but I can point to some that are kind of struggling too at the same point. And the
Yeah.
blended out to is where Christian's at, that 6% year over year. So it's definitely not a one size fits all. It's definitely not 20%, and it's definitely nuanced, but overall a strong market. And uh, Brad, I'm sorry, I didn't mean to cut you off there. Do you have something to say?
No, I was gonna say I wonder what Jeff Otto thinks about that, and I also would wonder what Zillow's saying because a lot of people default to Zillow to get their information as well,
Yeah,
and come to us sometimes last. Like I do love when clients bring this stuff to us and say, "Hey, what do you think about this?" And then we can kind of go through it. But it's interesting when they don't bring it to you that's media and headlines like that's what gets stuck in people's heads. So guys, just bury your heads in the sand like a little ostrich and don't read that stuff. Or read it and question it and be
that's
curious.
Yeah,
I
and
mean, I can speak to why those headlines happen. It's our data set is not that big. I mean, it's just not each little town in America is not that big, and Hoboken is bigger than most. I mean, we have 60,000 residents and hundreds of transactions a year, but you could still, I mean, you can take that data set and have a few outliers impact the end result. And you need to talk about these outliers. You need to either discount them. I mean, if you're taking the tails of the curve and having them change the result and make it look like it's much rosier or more negative than it actually is, that's just not fair to the consumer. I mean, that's basically what headlines are doing. So yeah,
100%.
talk to a local expert because
Wait, but
they'll
is that
they'll
negative or is that so positive for homeowners?
But it's misleading
well,
one way or another.
I wouldn't want, right. I mean, yeah, as a homeowner reads that and thinks it's positive. A
Yeah.
buyer that
I'm
hasn't
like,
bought
good thing
yet
we
looks
have
at that and thinks, now I'm too late to buy in
right.
Hoboken. And we all know as homeowners that we had the same exact feeling 10, 15, 20 years ago, I mean, when you first buy your first property, you have that feeling like, oh my gosh, I wish I had bought 10 years ago. Like this,
Right.
things are so much more expensive now. I just wouldn't want a headline like that to dissuade people from buying, thinking they missed out on something. And so it turns out that outsized return is not actually real.
Right.
It's a
Smoke and
more
mirrors.
nominal return. A good return is a great place to buy, but it's not like that. They didn't miss out.
Yep.
All right.
Yeah, and
I'm
and
going
to
to
that
consult
point,
Christian from now on only.
and to that point, I think that this whole topic that we're discussing reemphasizes why you need to understand the local micro people. And there's a massive elephant in the room in Zillow. They're a phenomenal brand. They're a phenomenal business, but it's very challenging for them to know all the little micro markets as well as the four of us would. So when we all see a headline that says Hoboken is up 20% year over year, we just laugh because we know that's not true. I wish it was as simple, but if you look at the specific details of how much a one bed, one bath has appreciated in the past year, probably not. If you look at a three bed and a family oriented, it's probably a little bit stronger because families are pushing and they're paying top dollar to stay in this town. So knowing those little nuances is what really helps you when it comes to standing out with your partner in terms of getting into the right home or selling your home at the right price.
Well said. And that's so true. And one other headline I want to touch on is the national housing deficit stuck at 4.7 million homes, which I think is a very interesting headline as it comes to Hoboken. And to what you just said, Christian, it was a perfect segue because you can't build much more here. We're sucking up every last little property and building on it, right? And we add a couple hundred homes here and there. But one transaction that we just had, which was a ridiculous number, we think maybe the highest price per square foot condo in Hoboken sales history. It's a super unique property. And you can make more properties that are not as unique and like add more supply, right? So like we are adding supply to to the homes, not as many in Hoboken, but there are some. So when you look at like what some unique properties could do in Hoboken in the future as top earners become higher and higher earners, a lot more cash floating around as boomers start to like loosen up some of their equity and downsize and buy pied a terres. Like there's no more supply coming at certain stuff. So when you're shopping in Hoboken, depending on what you're looking for, where your price point is, I think like keeping in mind the scarcity of stuff, even if you're paying a premium, you're paying, this might not be worth it. Like, oh, that view may not be worth it in my mind or that. But if you're buying for like future value, I think, and you guys tell me what you think if I'm on or off here, but buying the unique property for a premium might actually be the best long-term investment versus buying kind of a more blocking and tackling property for a more like average price or reasonable price. I kind of can see us trending that way over the next 5 or 10 years. What do you guys think?
Yeah, it's thinking big picture. It's thinking broad, right? So you're alluding to the deficit in the community over here, not specifically just Hoboken, but in general, there's only so much land. And in Hudson
Hmm.
County, we're pushing the edges. You're pushing into the marshes of Secaucus and the back end of Jersey City and all that. We're going to run out of supply. So what do we see what are we seeing happening now? We're going vertical. You look near the train, towers are going up. You look in the back corner, towers are going up. And that's not the MO over here. But to that point, if you think big picture, which a lot of investment oriented individuals do, they realize that, okay, this may be a short term hold for me in terms of I'm living here, whatever. It's very, very flexible in the long run as a rental because there's only so much supply.
Absolutely. Absolutely. Cool.
Yeah,
Anybody else?
I can mention one interesting phenomenon that's happening here in Hoboken is that the new build, there are hundreds of units coming this year and next year and the year after. I mean, we have uptown and downtown. Northwest Hoboken is the city plan was passed 5 years ago, and now the developers are all breaking ground. I mean, we have units coming on
It's
as
crazy.
soon as next summer, and
Yep.
then
Yeah.
same downtown. I mean, Christian just talked about Charlie, which is at the base of Washington Street. It's a 22-story luxury rental building, but these units are they're all going to be for rent, and
Yeah.
that it's I think there's a lot of reasons, and I can let the developer ultimately speak to it, but some of it's funding and whatnot. But the one thing you could say is that it's a great place to build rentals because we have so many people that move here. They might be a little, it's more temporary in nature. They're moving here for a job and they want to be close to their office, and it's like put your nose to the grindstone stage of life. Um, we have a lot of those people, and they're unfortunately the people that want to own real estate and invest in the community and maybe raise a family here. They're not going. There's not a lot of housing stock for them, and it doesn't look like any new housing stock is coming very quickly.
No. And it's a very interesting cycle. I think we talked about it a few weeks ago where like sometimes a new rental product can soften the sales market for a little while because all that supply makes renting way more attractive than buying that similar product. But then ultimately it sucks in another couple hundred people that want to stay and all that supply is gone. Like, ooh, I kind of like Hoboken. And now they want to buy. There's no more new supply of rental. And then they push back the sales market for that similar product back up. And we've seen that a couple times with all those like Weehawken Cove rentals that have happened at the T and Maxwell. Like we've noticed, like, ooh, people were going to buy that would have been a $7,000 carry, but they could have rented something even nicer and newer for 6. But then they came back and bought 2 years later, and then the market and there was,
Well,
so it was
also,
interesting.
when it's brand spanking new, there's all those crazy incentives and teasers. So it's like a no-brainer for year one. But then,
Hmm.
boom, year two, they get jacked up in rent price. And then they come to us and say, this is crazy. For this number, we can buy. But wait, there's nothing to buy. So it's
Yep,
kind
it's
of like,
dynamic. It's like a weird
"Whoa."
cycle. Like it's not that intuitive really to expect it to work that way, but it really does when you look at it and break it down. So it's interesting. It's really, and we'll see.
It's
This
going
is
to be
probably one of the,
crazy. Sorry, go
yeah.
ahead, go ahead again.
No, no, go ahead.
It's going to be crazy too because all this new construction is going to pop at the same time. Like, look at all these buildings. The Willow House next to Trader Joe's, all that stuff north of there too. Those buildings are up. All that stuff downtown on the other side, flanking the path station, that's all hitting at the same exact time. So that's going to create a monster of rental inventory. It's probably going to soften our the surrounding areas rental market too.
Yep. All right.
Be interesting.
Anything else to add
Sorry.
on this, guys?
Sorry, I didn't mean to cut you off.
All good.
All right. We're going to wrap with one last thing here. We went a little long. We're going to do a couple of these, but we want to do rank these 5 Hoboken things blindly without knowing what comes next. The first one we're going to do is delis. Who wants it? Who wants to rank them blindly?
Give that to Mark.
Yeah, I
Mark?
could take that one.
All right. So here they are. Rank these Hoboken delis blindly without knowing what comes next. We got 5 on the list. Number 1, Fiore's.
Number 3.
Number 3, putting one of the, I think a lot of people would have that number 1 on their list. A lot of people hear that name. I think it becomes best of breed. So I'm interested to see what we're saving 1 and 2 for. All right.
Oh, I
Number
know.
2, M&P Biancamanos.
1.
One, Peter and Terry. Let's go. Let's
I'm with you,
go.
Mark.
I mean, I still don't understand after all these years how they're making a profit. Those sandwiches are so freaking thick and big, but those guys are the best. All
I
right.
know what number two is going to be.
Number 3 choice is Vito's.
2.
Number 2. All right. He feels confident about these two. Like he knows
I feel
exactly.
confident.
There's a couple of more than 5, so you might not have all the ones on here. All right. The next one, Lisa's.
That was my number 2.
Lisa's. So Lisa's is 5.
Lisa's 5. Ooh, ouch. Lisa's. I lived a block from Lisa's for years. It nourished me through like my very right out of college days. But I'm with you. I think quality wise, I like your list so far. And number 5 on the list here is Luca Brazzi's.
Well, yes. Number 4.
Number 4 is the last spot we have left. Was there someone you were
Yeah.
saving a spot for? How do you feel about your list?
I mean, those are the top ones. That's
Those are
it.
the
And,
ones.
yeah, and they, every single one of them makes their own fresh mozzarella every
Oh,
single morning.
mm,
That's an important distinction.
still
Um,
warm. Oh,
Inside Intel, there is interestingly Luca Brasi and Lisa's are looking for suitors. If anyone wants to get into the Italian deli game, um, and even Vito's, I've heard he would, for the right price, he would consider selling the business. So we're starting to reach a point here where either the next generation needs to take over, or we're going to see some of these delis go away. So
So I
although,
don't want to end this thing on a bad note, but like I worry about that when you see one go down, and like we know that there's scenarios with some of these that the kids have done other things with their life and they don't want to run those delis. And
yeah.
frankly, running a deli for the rent that you can get for a storefront on Washington Street is hard to justify when you can rent that out for a much bigger number to a lot of other types of business. So it's a scary thing. We got to enjoy them while they're here because God knows how long we're going to have these relics in in town.
Yeah,
But
and
hopefully, some people pick them up.
yeah, and it's not a deli's per se, but Mario's, they've done a great job of breeding their second generation to take over. Because if you go in there,
Yes.
all the sons are working and they can't.
Yep.
All the
They're
boys. I
they're
love
ready to
it.
roll. Yeah, they're
Yeah.
all
I
big
don't.
Jets fans.
I don't know them that personally. I know them. Met them a handful of times being in there. Now they're the greatest people. Like
Yeah,
what they do on Thanksgiving with
yeah,
That's
big
so
time.
it's.
cool.
We'll
Very
have to
cool.
maybe
so
we got to
community.
start getting some guests on eventually. Maybe we'll be on top one of the top of our list because they're like long term Hoboken, long time
Well,
people. So
one of my favorite things about Mario's is I just went by there on my way to the office. They have a sign on the door that says "On vacation till September 8th."
they're
That's when you know
closed.
you're running a good business.
They're closed to
Yes,
September 8th.
no pizza this summer.
They go to
Sorry.
No way. Wow, but that's a long one. I
they're
know like a lot of
beyond the
the guys go
Motos
back to
too. They
Italy.
go.
Yeah, but for like two
Mhm.
weeks, like that's a long one.
Yeah.
That's 6 weeks, 7 weeks. Good for them. Enjoy it. Live it up, guys.
Yeah, I think
Enjoy.
it's a great, like, that's a great community business when you know your customers are coming back. You don't need that continuity. You
Yep.
can take a break, and your customers respect it. They miss you, and then they come right back as soon as you reopen. I don't
Yeah,
think a lot of business don't feel like they have that luxury.
And
absolutely.
shout out to Mario's too. It went from a dollar to like 250 or something like that. But you can get a beer there with
Yeah,
your pizza, which I was always tickled by that. And I said, for 15 years, I gotta get this Blue Moon. I gotta get this Blue Moon. I finally got it last year for the first time in all those years.
Blue Moon is great. I just don't know if Blue Moon is great with a pizza. Kind of heavy.
It's very heavy.
It
I
went
agree.
very well. It was in the winter
Yeah,
time. You gotta do it in
fair
the
enough.
winter when we're wearing a
There
coat.
you go.
It's
Fair
a
There you
enough.
go.
winter pairing.
Yep. All right, guys. Any closing words? Anything to share before we wrap here? This is a good 40 minutes.
I just love
Um,
this. I love this. Thank you
yeah,
guys for
this is
including
definitely
me.
fun and brings out the best in us. What I would say is to the broader community and whoever gets their eyes and ears on this, when it comes to rates being higher, like they just spiked this week, I would say don't be intimidated. You just need to get closer with your advisor on how to handle it because if you have the right strategy, you can handle any market. It's just being thoughtful in terms of the short and the long term on how to approach things.
I'm going to
I'll add
echo
to that,
that.
Christian.
Go ahead, Red, and I'll
Sorry.
finish.
Oh, me,
Or go.
me and you are just like simpatico today. um, First time home buyers, for what it's worth, 25-year-old Red Drasher at the time bought a home in Bridgewater, New Jersey. I bought a little condo, and my little brother was helping subsidize my mortgage, but my interest rate was 6.8 something. So don't be so freaked out by almost 7%. It's not that abnormal, and you will live to tell the tale. I did, and they came down, and I refinanced, and everything was great. It still proved to be a super investment as a 25-year-old kid who had no idea what they were doing. So 6.5 is not catastrophic.
I
All right.
love that. Yeah, think big picture. If it's the right
Yeah,
time,
just do
and
it.
you have saved up the resources, that's the time to buy, right? It's quality of life over the math. The math is important, but just if you're compelled to do it, make it happen.
Yeah.
Now, I would just finish that thought off with like, not only don't be dissuaded by these higher interest rates. If you're a real buyer, like if you want to be in something in the next few months, I'm not telling you to go buy outside of your comfort zone or outside of a cycle that makes sense. But if you're like, I got to buy something this year, I would be locked in on August. High interest rates. If someone comes on the market, I know a couple different sellers right now in our Slack channel today. You guys probably saw motivated seller here, motivated seller there, like people that want to move their properties because they're motivated for whatever reason it is. People go on vacations, interest rates are high and scaring people away. There's some motivated sellers out
Yeah.
there. I'd be locked in on August if I was a 2026 home buyer. I would not want to wait
Yeah.
until rates float down, people come back from vacations. Like, so if you see something you like, pounce. It would be my
Yeah.
advice.
Your
We're
your
gonna do the same.
competition will be scarce. They're gonna be on vacation, so hop in there, scoop it up, call your broker.
Ab-
Woo.
Absolutely. So, all right, guys, great hanging out. We'll see y'all next week.
Thanks,
Talk to you guys.
guys.
I'll
Okay.
see
All
Red
right.
downstairs in 5
Thanks,
minutes.
everyone. Bye.
I'll see the rest of
See
you
ya.
guys next week.
See you later.
Bye bye.
In 5 minutes.